From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Ahead today on the grain markets, K-State's Dan O'Brien. Dan will provide an update this week on local grain price bids around Kansas and the degree to which they remain profitable for you producers. And he'll pass along his latest price probability projections for corn and soybeans. Following then, K-State's Reid and LaVell Winsor. They'll have the details on the upcoming series on risk management skills for Kansas women in agriculture. These are weekly sessions at over 30 locations around the state, and they'll have the particulars on what's to be covered there. Also standing by, K-State's Chip Redmond to talk Kansas agricultural weather with us. All that directly ahead on this Agriculture Today. You're tuned in to the K-State Radio Network and Agriculture Today, our Friday edition. Welcome once more. Right into the grain markets, Dan O'Brien with us once more, grain market economist, K-State Research and Extension. And Dan, with, in recent trading days, reinvigorated markets, the spot trade around Kansas, you say, is, well, suggesting profitability.
Yes, of course, you had the cash prices for these crops. Then we have the new crop forward contract prices. For instance, for corn across the state, running from west to east, Colby, Garden City, 607, 594 for cash prices, positive basis. That 607 is 30 over, and that's in Garden City. You've got pretty good prices through the central part of the state. Salina, 597, Hutchinson, 611. Actually, the Hutchinson at 611 at one of their main terminals is actually the highest bid. So you're probably looking at an export bid there, it would look like. In southeast part of the state, still great prices at 552 in the Columbus area, but a basis 25 under, which is, again, quite different from where the rest of the state is at. But then the new crop bids are running at 524, 519 through Colby, Salina. You get to Garden City, 559, Hutchinson, 530, Columbus, 524. Most of them, except for the Garden City bid, is still 10 over. The others are anywhere from 20 to 30 under. So we run our KSU crop production budget estimates, and on November 1st we ran them, came up with break-even corn prices 425 to 450. Fertilizer prices have gone up since then, but it would seem we're still looking at really pretty profitable forward contract bids. On grain sorghum, generally the lower seed cost and the lower herbicide costs for grain sorghum on dry land in particular, generally giving us pretty profitable prices. You're seeing forward contract bids, highest one in Garden City at 514. Also Columbus, pretty high forward contract bid. That southeast area also at 514 at 35 under. The rest of the bids running 485 to 499. So still pretty strong prices. We have seen exports in kind of a herky-jerky manner for grain sorghum start to kick in the last couple of weeks especially. That's what frankly needed to happen to keep grain sorghum prices going strong, and the cash prices for sorghum up front, which would be the current export number, the highest bid 636 in Topeka, and the corn price is 584. So that sure seems to be an export situation. Salina 621, and in all the rest of the other places, again Colby 602. So you've got really over $6 bids in most places except Garden City at 587. Again, we're looking more to feed there than elsewhere, and in Columbus. So just interesting as we have the world market affected by geopolitical issues between Russia and Crimea, what the Federal Reserve is doing, et cetera. We translate that back down in Kansas to the local cash levels for feed grains, and we still have very good prices. And we do see sorghum with its export dependency standing out, and you do see differences across the state in that feeding area in Southwest. It sure affects the feed grain bids. I just would add in, when you look at soybeans, for as optimistic as we are on feed grains, cash prices for beans seem subdued relative to where we'd been, at 13, 14, 15. Cash prices in Colby at 1174, new crop bid 1126. The highest bid in the state, highest bids, Salina, Topeka at 25 under, about 1219 for the lead. New crop bids highest new crop bid in Topeka at 1164, Salina 1154. So, yeah, the export-oriented areas for beans really are showing up the most.
Now, as far as wheat prices go, Dan, there are two things here you suggest. One of those would be the aforementioned political tensions in the Black Sea region, and the other, some quality issues on the world wheat market in particular, with one of our leading competitors in that trade. Speak to that, if you would.
You and I were talking before we came on air, Eric, about the factors affecting the wheat market, and there seem to be at least two things involved. First would be that the market is worried about potential geopolitical conflicts, a polite way to say military conflict, in the Black Sea region. And again, two of the world's largest, low-cost, well-positioned wheat exporters coming in. So that's one factor. Another factor is the situation in Australia, where they have had a lot of rain. They're anticipating a large crop, but with all that moisture, their quality's down. And that you follow that up with the problems we've been having in North America, in hard red spring, in the white wheat areas, and you really run into a lot of concern about having adequate supplies of high quality, food quality milling wheat to actually work with. So that's there as well. And one thing I'd add in, I know it's kind of off season to be worried about how much moisture we have, but when you look at the amount of rainfall we had in the last week, the last 30 days, we're counting on a recovery, but the moisture is going to have to come because it's not here yet to rely on to give us good crops to recover from this. So got an amalgamation of factors all coming in to give us wheat prices across Kansas and everywhere but Southeast. We're over $8, well over $8, say $8.11 to $8.29. And in Southeast Kansas, we're at a paltry $7.87, which is unbelievable for a price. That'd be for current cash. Then wheat, with all its uncertainty, you have new crop forward contract bids, top end for July delivery in Topeka at 804, and then everything else, literally every other bid in the state running from 783 to 788, 789. So what tremendous bids, but we have analysis kind of followed by paralysis. How do we tie in those prices? We're not willing to do it without crop insurance. And this year at those prices, we're probably even willing to look at supplemental coverage to even bolster that up more, just because of the amount of money that's on the table. When you've got good income prospects like this, you're willing to invest more to try to protect it. And that's probably what people will be doing as they make their insurance choices this next coming months.
Let's add another thing in here, Dan, if we might. You say you have put together a fresh set of price probability projections for corn. Now, one wonders just where those might be headed with tight supplies still part of the picture here.
I wouldn't be a card-carrying economist if I didn't, and a follower of Bill Tierney. He used to be Dr. Doom here in Kansas State. If I did first give what could happen bad. So right. What could happen bad, and say about a 15% chance, just by my own judgment and looking at the landscape, a 15% chance that U.S. exports could really falter, that the South American crops, great. China gets all it wants from Ukraine without interruption from the issues we talked about there. And we end up and say drop 150 million bushels worth of exports. And then instead of this 545 that the USDA is projected, all else held equal, then we still have, say, 475. But that would be tied in with problems starting really pretty quickly after the first of the year to get the season average price down that low. But really, there are headwinds for any accumulation of stocks in reality. And of course, the USDA's projection was for 545. But there's a pretty good likelihood USDA will have to increase the amount of ethanol usage. It has projected by about 150 to 200 million bushels. So that if that came in or we came into the January report and figured out, well, we only have 175 bushels per acre and 14.9 billion instead of the 15 that they came up with. And that is within the margin of error very easily. Both of those, you end up with stocks tightening a little bit further. Instead of about 1.5, you're down to 1.3 to 1.35 billion bushels carry out. Stocks to use around 8 to 9, and you're looking at prices $5.75 to $6. So all that put together, the USDA's projection is 545, about 50% chance that that's going to actually happen. and another 35% chance that, we're closer to 6 or 575. So very optimistic for the corn crop that's coming until we get the next crop planted and see what our prospects are for 2022 harvest in the fall.
And we've a few moments left here. Might mention you have conducted the same exercise for soybeans in your market notes this week as far as those price probabilities go. What's the summary there, Dan?
On the positive side, again, USDA projected 12.10 as a price, and there's about a 50% chance that that's right. It could go either direction from there. You've got the opportunity for either higher or lower exports coming in out of that. Yields could shift around some. So about a 100 million bushel swing either way takes you from the high side, $12.75 to $13, to the low side of about $10. At what we're seeing right now, it doesn't seem like South America is having trouble getting their crop in. They're still worried about La Nina. But I think a lot of where we're going to go in the soybean market will have to do with how well that crop in the Southern Hemisphere continues to develop. It'll be a weather market going into January, February, March, but it won't be our weather. It'll be South America's.
Well, producers, you can have a closer look at the details of Dan's price probability projections for corn and for soybeans in this week's notes that he's posted on the agmanager.info website, agmanager.info. Dan, as always, thanks, and next Friday we'll catch up with you once again.
Thank you, Eric. Take care.
He's with us each week to talk grain market trends. Dan O'Brien is a grain market economist with K-State Research and Extension. We'll be back with more for you on this Agriculture Today. Welcome back to this Agriculture Today, and to fully inform you producers now, particularly women in agriculture, about a great opportunity that's coming up in January and spilling over into the month of February. This is being billed as the Risk Management Skills for Kansas Women in Agriculture series. It'll take place once a week for several weeks early in the new year. And it's being organized by the Agricultural Economics Department at K-State, of course. And joining us from that department, agricultural economist Reid and LaVell Winsor of the Farm Analyst program. They're the co-coordinators of this series, Robin, that you and LaVell and the organizers are bringing back from a very highly successful previous run.
Yeah, so a lot of people may remember this series that we did back in 2020 before the pandemic hit. And we did the same format where LaVell and I were on campus, and we broadcasted to 32 host locations across the state where participants could come and gather and be a part of the program. And it was more highly successful than we ever anticipated back then, with 685 participants for the 4-week series that focused on farm financial topics of record keeping, balance sheet, income statement, and cash flow. And we had a lot of demand to do this again. So rather than do those same set of topics, we came up with this risk management series, which will again be the same format, but an entirely different set of topics.
Before we get to this unique format, though, LaVell, we bring up the topic risk management, and folks might think, well, that's not as intense of an issue now as it might have been earlier, with commodity prices reasonably good to great in some circumstances. But you will maintain, presumably, that there's always room for enhancing risk management on the farm or ranch.
Well, and you're right. Risk management is always a really important topic on the farms. And when we were planning out the initial phases of this program a year ago, I don't think that we would have realized exactly what we were encountering today. We do have higher prices than we've had for quite a long time. But of course, there's been quite a whipsaw of up and down movement in the prices. But on top of that, we also have inputs in an almost unprecedented time, prices being so much higher, and then maybe even the lack of availability. And so we really feel like risk management will be just a valuable session for people to participate in.
And of course, we'll walk through some of the highlights of the program. Before we go any further, though, Robin, it is billed as a program for women involved in production agriculture, but it's for anybody, really, isn't it?
Absolutely, Eric. Yes, we encourage anybody that are interested in these topics to come to our local locations and participate. And again, why are we doing this by having people come to a local location? Really what we found is by listening to the keynote speakers and the different topics each night, it is reinforced by doing a hands-on activity that's facilitated by the local extension agents at the local location. And then there are discussions and there's local presentations that happen as well. So that is really, I guess, the bread and butter of this program is listening to the keynote presentations, but also being able to apply what we're talking about to a case farm example and learning how that can assist you in the management of your own operation.
And LaVell, you have not just a few locations lined up, well over 30 now, and that list seems to grow one or two every week or so. But that's how robust this has become.
Yes. So this will be at 36 host locations across the state. We did try to look at the map across the state for the locations and make sure that nobody would have to drive too terribly far to a location. Once again, we will broadcast live from campus with the topics, but then be able to have lots of communication and networking at the location.
Well, to spell out further when this will take place, each of several Wednesdays starting January the 12th, the 19th, then the 26th, February the 2nd, and there will be an extra session later on in the month of February, which we'll have Robin describe in just a moment. But LaVell, if you would talk about those 4 initial sessions and what subject matter will be addressed there.
Yes, and so January 12th, we will focus on enterprise budgets. As I mentioned a moment ago, especially with input prices. And so we'll focus on enterprise budgets, talk about that, and then we'll have a hands-on activity that will be done at the location. And then the idea is that this is something that's usable that you can take home during the week in between and actually implement and do your own numbers and figure out how that's going to look for your own farm. The next week is January 19th, and the topic that night will be crop insurance. So it'll build upon having the budget that we had from the previous week and then making decisions on crop insurance. There will also be a local topic on the 19th, which is around stress and resiliency. And of course, we have been in some stressful times, COVID and then other things as well. So we feel like that will be a very valuable topic. The third night will be January 26th, and that night we will focus on crop marketing. And so that will be how to market your crops, futures, basis, cash prices, things along those lines. And then the local topic for January 26th will center around family communication, which most of us are from family farms, and we know that family communication is just a little bit different on farms. And so we'll have some things to talk about on that evening around that. The fourth night will be February 2nd, and that will be focused on Farm Bill programs, ARC and PLC. Really, as you can see, these topics all work together, and they will build upon one to the next night. And so it's really important that people do attend all 4 nights so that they get the full value of all of that together.
Noting that each of these sessions begins with a meal at 5:30, and each night will wrap up around 8:30. But there is an additional optional session taking place later in the month of February, Wednesday the 23rd to be exact, Robin, for cow-calf producers.
Yeah, so our main 4 sessions really focus on cropping enterprises and how to do risk management principles in those different cropping enterprises. But we didn't want to leave out our obviously robust beef cow-calf industry in the state of Kansas. So we're going to come back with an optional 5th session on February 23rd that goes over these same topics, but for a beef cow-calf herd. So we're going to be talking about enterprise budgeting, cattle marketing, and then insurance options all that same night. And those that register for the first 4 sessions can also register for that optional 5th session, Or if somebody is just interested in that beef cow calf risk management and not the original 4 of the series, they can also register independently for that 5th session.
Well, in total, it's an outstanding lineup for all of these sessions. January isn't all that far away, so what are the details, if you would, Robin, on registration?
So you can actually register right now. The easiest way is to go on our website, agmanager.info, under the events section, and you're looking for the Women in Ag Risk Management Series. There's a link to register there. You don't need to pay until you arrive the first night of the series. The $50 registration fee will cover all your meals and program materials if you register before the end of the year, before December 31st. If you register after December 31st, it's actually going to be $75 registration fee. And we won't be able to guarantee that we have a marketing book and some of the materials that we have to pre-order if you register after that time frame. So that's why we really need people to register early. And then if you would like to attend the 5th additional session, it will be an extra $10 if you register at the same time as the series, or $15 if you want to register for that session alone.
Very good. Again, all at agmanager.info. And LaVell, if one would like to see a list of the locations featuring this series, well, we can't run through all 36 here today, but there's someplace that folks can go to take a look at that, right?
Yes, really the easiest way to see the locations is, once again, to go to agmanager.info. Under the events tab is a link to this series, and all of the locations are highlighted there. And then also, whenever you go in to register, you'll select the location that you want to attend.
And I'd also just like to acknowledge the number of extension agents we have across our state. Those are personnel in our local county and district offices. We actually have 90 of those professionals assisting on this project at those 36 host locations. There is a lot of robust activity and presentations that are going to happen locally at those sites. And I just want to acknowledge all the wonderful staff that we have in those offices working on that with us.
If you've an interest at all in this excellent program, be sure to save your spot in it at the location nearest you. It's the series of risk management skills for Kansas women in agriculture series of seminars taking place the evenings of January 12th, 19th, and 26th, February the 2nd as well, and the optional session for cow-calf operations on February the 23rd. All the specifics are on agmanager.info. Look into it, and congratulations to the two of you on another fine program put together, and the best of luck with it. Thanks for previewing it with us right here.
Thank you, Eric.
Thank you.
From the Agricultural Economics Department here at K-State, Robin Reid and LaVell Winsor. You're listening to Agriculture Today. Topping off this Agriculture Today, it's our weekly glance at Kansas agricultural weather and the latest from the Weather Data Library here at Kansas State University. We're in touch once more with K-State Research and Extension meteorologist Chip Redmond. Chip, with fresh in hand the recap of our conditions for the month of November here in Kansas. One would assume the numbers would confirm that it was uncommonly dry for the month, even though fall typically is a little on the arid side. What do you have for us?
Yep, warm and dry. And that really just kind of sums it up. You know, we had one significant rain event that was for a very small area in the Northeast. Another a little bit more widespread but fairly light rain event in the central or west central Kansas. Other than that, there was no moisture in the state. Especially the southwest and the north central saw no measurable rainfall, and maybe about a tenth of an inch in west central and central. But other than that, nothing. So we grew some pretty big precipitation deficits across the state through the month. Even though our precipitation does trend downward, some areas grew as much as 2 inches deficits in the southeast and only about a half-inch deficit in the west. So with that, we saw drought degrade as well. But real quick, with the temperatures for the month, it was warm. We had a cold spell to start the month out, but then aside from about 3 or 4 other cooler days throughout the month, we were significantly above normal and we ended it with a big bang with 10 to 15 degrees above normal on the 29th.
And we are still in the midst of that warmer weather, which we'll talk more of in a second here. Assuming that our latest drought monitor is showing that our situation is getting quite serious again throughout even more of the state.
Yeah, we're just gradually expanding it out. The precipitation deficits are growing, yes, but we're seeing this warm weather and dry weather. I don't know if anyone's noticed recently, but there's been very little dew and frost on our cars. Yeah. And that just goes to show how dry it is and how much warmer it is at night lately. And with that, we saw bigger moisture demands from the soil and from the existing moisture. So we expanded D1 in western Kansas, and then we expanded abnormally dry conditions in central and southeast Kansas as well this week.
So here we are in the month of December then, warmer than normal, certainly drier than normal. Is there any sort of change in this pattern whatsoever in the outlook, Chip?
Well, unfortunately, we're kind of stuck in this La Nina type pattern. We're going to cool down this weekend, but we're still going to be above normal temperatures going into next week. And that's most likely going to be the case through the entire month. When we start to look at precipitation, there's a little bit of optimism for maybe mid next week. We might get into a little bit more active pattern where we get 1, maybe 2 shots of light moisture. Nothing significant this time. Might even see some snow. But the best chances right now are in eastern Kansas, and overall confidence is pretty low. After that, it's really suggestive that we stay in a warm, dry pattern for the remainder of the month.
And as far as the chatter about La Nina, is there any indication how long we'll remain in the grip of that pattern? Will it be for the duration of the winter?
Well, last year was a La Nina year, and obviously we had a cold February that everyone remembers pretty well.
Right.
That was influenced kind of by the polar vortex. As we get into later in the winter, it does appear that we'll have better chances of maybe some interaction with the polar vortex or even what we call the Madden-Julian oscillation. But you know what? Everything right now is biting into this persistent La Nina. We'll gradually transition to neutral conditions by early to mid-spring, but the La Nina influences are pretty locked in right now.
Well, we'll deal with the reality of it, and we do appreciate the update. Chip, thank you. Enjoy your weekend.
Yipper, you too.
Our weekly segment on Kansas agricultural weather, Chip Redmond there, meteorologist with K-State Research and Extension. The best to you this weekend, and thanks for listening in. Eric Atkinson for Agriculture Today over the K-State Radio Network.